Now, I by no means don't hate JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. I even still hold hundreds of shares of it in my long-term portfolio and really don't even have that much of an interest in selling those off. But I will say these days, with more and more premium income ETFs coming out throughout the market, especially ones that also offer Nasdaq 100 exposure, JEPQ just isn't necessarily the king anymore in my opinion. And in this video, I want to share with you which ETF I do think is the replacement for JEPQ, and or an ETF that you guys should definitely look into if you do like JEPQ by any means. So if you like Nasdaq 100 premium income exposure, but you want to learn about an ETF that does this even better than JEPQ in my opinion, then definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now the ETF that I'm talking about that's better than JEPQ is GPIQ, and Skeptical12 on SeekingAlpha.com wrote, GPIQ is the clear outperformer over JEPQ using multiple criteria. Let's read about it. Investors no longer need to choose between income and total returns. Covered call funds like GPIQ offers a compelling balance. GPIQ's nuanced strategy of selling options on holdings and partial portfolio coverage delivers superior total returns, especially during market rallies like we've seen recently. GPIQ's distributions are stable, and its tax advantages further enhance after-tax returns compared to JEPQ's more rigid approach. Given GPIQ's consistent outperformance and adaptability in volatile markets, I reiterate my strong buy rating for the Goldman Sachs Nasdaq 100 Premium Income ETF GPIQ. Reading on, it says the idea that investors must choose between income and total returns in 2025 has clearly become a false narrative. Evolution is part of life and also an important aspect in finance. Today, there are a number of appealing options that individuals can choose from that offer a solid balance between income and total returns. One of the increasingly common forms of investment for those prioritizing consistent distributions is covered call funds. Some of the most basic option-based investing options, such as the Global X Funds, QLD for example, were the first covered call funds to gain widespread interest, and QLD was the first one that I ever bought. But these funds use very simple approaches that have not held up over time. Many of the newer covered call funds are using much more nuanced and effective strategies to offer investors a better balance between income and total returns. Two of the newer covered call funds are the JP Morgan Nasdaq Equity Premium Income ETF JEPQ and the Goldman Sachs Nasdaq 1 GPIQ. JEPQ's inception date was May 2022, while GPIQ is newer in October 2023 being released. Now, both of these investments track the Nasdaq 100, as you guys know. GPIQ has offered investors a total return of around 60% since October of 2023, while JEPQ has offered around 52.44% during the same time frame. The Nasdaq 100 index, with these investments closely tracked, has offered investors around 70%, so both of them have lagged behind the Nasdaq. GPIQ has also performed notably better than JEPQ year to date. The Goldman Fund has offered investors total returns of 12.64% during this time, while JEPQ is at 7.49% during the same time period. The Goldman Sachs Nasdaq 100 Premium Income ETF GPIQ has an expense ratio of 0.29%, a trailing yield of around 9.9%, and $1.47 billion in assets under management. The fund seeks to provide passive exposure to the Nasdaq 100 through actual ownership of equities. The JP Morgan Nasdaq Equity Premium Income ETF also seeks to track the Nasdaq 100. The fund similarly holds actual equities as well. JEPQ has an expense ratio of 0.35% and a trailing yield of around 10.82% and around almost $30 billion in AUM. While the holdings in both these ETFs are very similar, the option strategy used by these two funds are notably different. JEPQ uses equity-linked notes or ELNs, and the investment sells monthly call options that are usually close to 5% of the money, but the ETF adjusts the strike price of these contracts based on market conditions. JEPQ does not state what percent of the fund is covered with call options, but ELNs can make up to 20% of the asset base with this investment. The fund performance during market rallies also shows the ETF usually covers most of the exchange-traded fund portfolio with call options. Though GPIQ was better able to track the NASDAQ 100 during the rally, the Goldman Fund has offered investors total returns of almost 18% since early May compared to the composite index, which has risen around 20.5%. GPIQ tracked the rise of the NASDAQ index at nearly twice the rate of JEPQ, and this is because of the fund's more nuanced option strategy. GPIQ similarly sells out of the money calls, but the fund writes options against individual holdings and also clearly does not usually cover the same percentage of the ETF's portfolio as JEPQ. While neither JEPQ or GPIQ give investors an exact percentage of the fund's positions that are covered, the performance shows that JEPQ is likely more conservative in covering the investment portfolio. GPIQ typically covers 25 to 75% of the ETF's portfolio depending on market conditions. Now, as a side note, because GPIQ doesn't necessarily cover as much of the portfolio, remember guys, this means much more potential upside, but also means much more potential downside. The two biggest differences between the two option strategies used by GPIQ and JEPQ are that the Goldman ETF write options against individual positions rather than the NASDAQ 100 index, and also generally covers less of the portfolio so investors can capture more of that upside, or during bad times more of the downside. Now, lastly, this writer said all investments have their risks, and there is not a lot of data on either GPIQ or JEPQ, and neither fund has been tested during a severe and extended sell-off. GPIQ's more nuanced approach of selling options against individual positions and covering less of the portfolio has clearly produced slightly better results than JEPQ's more basic strategy. The fact that has been true particularly during market rallies. GPIQ also offers better tax advantages since much of the fund's income is taxed based on 1256 contracts, where 60% of the income is taxed at long-term capital gains. GPIQ also has more income tax as return of capital than JEPQ as well, although JP Morgan fund uses equity-linked notes, enabling this ETF to pay slightly more income to shareholders. While JEPQ is likely to pay more pre-tax income to GPIQ holders, the fund uses ELNs and doesn't adjust the strike price options that are sold at more adverse market conditions. GPIQ should continue to offer investors better overall returns despite having similar risk profiles. Now, because of those reasons, we've seen GPIQ grow a lot faster as far as total return goes since April than JEPQ, recovering very sharply ever since the drop in April, and still paying nice distributions with around 10% trailing 12-month yield. For those reasons and more, a while back, I stopped buying JEPQ altogether, which at one point was one of my favorite high income ETFs across the entire market. And if and when we do see a market pullback someday here, I will likely be adding a lot more GPIQ to my portfolio. Now, even with all that being said, before I go into a question for you guys down below, if I were to ask you to choose between GPIQ and JEPQ, which are you picking and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.